In your consumer corner this morning, tax season is here and many worry about the possibility of getting audited, but there are some things you can do to avoid a second look from the IRS. Certified Financial Planner Joe Bert joining us this morning with some advice. Joe, good morning. Good
morning,
to see
Andrea.
you.
You too.
So you've got the 5 red flags that could increase your chance of an audit in 2020. We'll put it out there. Nobody wants to have to go through an audit.
No.
Yeah.
You get that dreaded announcement, that dreaded letter from the IRS. By the way, the IRS, if they're going to audit you, is never going to tell you through a phone call. It's not going to come through email. That's stuff you want to stay away from. It's going to come in a letter.
Good advice. So look for that notice. Hopefully you won't get it, but if you do get it, it comes via snail mail from the USPS. Okay, first on your list, making too much money. You say this is a red flag.
Yeah, particularly if you're running your own business, and you're filing what's called a Schedule C. They're looking for, if you're making over $1 million, that's the good news, but that doubles your chance of an audit. By the way, your chance of being audited is less than 1%. But if you're making a lot of money and you're filing a Schedule C, you're self-employed, because you got a lot of opportunity there to play games, and a lot of people do, you've doubled your chance for an audit.
What about an extreme change in your salary, going from, let's say, making $30,000 a year to $100,000 a year? Salary
is one thing, because you get a W-2. All right, and it's coming from a company, and it's, you're getting the income there, and the company. Now, if it's your own company, and then you have to look at what's going on within the company. But in your situation, when you get that big bonus at the end of the year, the $1 million, you don't have to worry about it.
Got it. Okay, next point here, failing to report all taxable income.
Yeah, you're going to get a 1099 for stuff that you have income sources, like even gambling. People forget about that. You get dividends, capital gains, you're going to get a 1099. And the common mistake is that people get this stuff and it looks like junk mail and they throw it away. Well, the bad news is that the IRS also gets that 1099. They get a copy of that. And what will happen, it'll kick out an automatic bill to you. It's not necessarily going to generate an audit, but you'll get that letter saying you owe such and such because you didn't. But now, if you get a few of those and they're going to take a deeper look at your return, you may subject yourself to an audit.
Claiming large charitable deductions.
Yeah, you want to be careful here, particularly if it's something you contribute that's like artwork or something, and you're going to take a big tax write-off. You got to file a special form for it. Or if your deductions are greater than what the normal would be for your income. The IRS has statistics as to what people do based on what your income. And if all of a sudden your charitable contributions are way out of line, it's an audit.
The threshold for that is about $500, isn't it? Or they've set a limit, right?
Yes, you can give away cash contributions, but over $500, you're going to get a receipt from the charity.
Gotcha.
But it's the things when you're going to give away like a car or painting or something, and you're going to take this huge deduction. You've got to get an appraisal. Okay, 2 last ones here. Not taking the required minimum distributions for your 401 and writing off losses from a hobby. Once again, you got to the law's changed. You get what's called the required minimum distributions now start for most people at age 72, and you have to take it. If you don't take it, it's a 50% penalty plus the tax. And the hobby loss, and people have, they're artists, they create jewelry, whatever. You have to have a profit in those kinds of things in 3 out of 5 years. Or if you're breeding horses, you have to have a profit in 2 out of 7 years. And those are kind of red flags because there's a lot of room for flexibility in there, and the IRS is looking for that stuff. Good advice as always, Joe. Where can people find you? Just give me 2 words, Joe Bert, B-E-R-T. Joe, thank you. Thank you, Andrea.